Hello traders, and welcome to this weekly update, video update for S&P 500. Last Friday we see that the index reversed lower and it finally closed below the 55th and the 21-week SMAs, and this is the first time that the index closed below these SMAs since here March 2016. That's 3 months ago, and also the 14-week RSI has crossed its SMA and has turned lower and has made its first close below its neutrality area since February 2016. Looking at the daily chart, the problem with this count is that this rebound touched the high, this high, and then we had to drop lower, and that invalidated our immediate count of this being wave 1 and this wave 2 and this wave 3. And thus it leaves us with some questions about what is the correct count for those recent moves. And there are actually several alternatives. One would be that we had 1, 2, 3 ended here and 4 here and a 5th wave here, which means that wave 1 of 5 ended here. The other is that wave 1 ended here, and then we have A, B, C for a W, then an X, and then A, B, C for a Y to the downside for a larger correction for wave 2 in a more complex way. There is also the alternative that this here was the end of wave 5, which means that if wave 5 ended here, we are looking probably into a much larger correction, and if this is an ABC at this point, that would mean that we're heading into a catastrophic decline like that, but it is not the time to consider that scenario. The other scenario would be that this is wave 1, 2, wave 3 ended here, and we're looking for a larger correction to the downside, possibly below this level, and then another rally for a 5th wave black. We have a difference of one wave between the German DAX and the S&P 500, and that's why I don't like the idea of wave 5 being ended here. I prefer this to be a wave 4 that will end somewhere when it touches this trend line, for example, and then we will have a wave 3 or 5 to much higher level. That will play better with the correlation between the two indices. Looking at lower time frames, this is the rebound that I'm talking about. It is exactly at the high of at this high. I prefer the scenario where this is wave A, this is wave B, and this is wave C of a W. I prefer it more to the scenario that this is a wave 4, because it is too small to be a wave 4 of that degree, although it's not improbable, because here we had a wave 2 that retraced a great part, let's say, not a great part, but a large part of wave 1, and thus based on the rule of alternation, this wave 4 should be small, but again it is very small, it is very shallow for a wave 4, so I prefer the scenario of ABC for W for now, but we will see how the price, how the decline will unfold from here. Looking at the 1 hour chart, excuse me, you can also see that it is this decline could be either 1, 2, 3, 4, 5 for wave A, or 1, 2, 3, 4, 5 for A, B, and C for wave 4, and this could either be W, X, Y, or possibly something like A, B, C for 1, 2, A, B, C for 3, 4, and A, B, C for 5 in the form of an ending diagonal, let's say, but I don't like it. I don't like that scenario very much, so I prefer this scenario where this is a 5-wave move, this is a correction, and this is a 5-wave move. Eventually, if no, I don't know, probably we will have another low here, because this move also looks like an ABC, and then this will be A, B, C for a W here, looking for a sideways move in an X, and then another ABC to the downside for a Y that will conclude this wave 2 here. That pretty much is everything I had to say for the S&P. We need more price data to select the best count. Thank you very much for watching, and see you next week.